Good. How are you?
Good. Peter just landed here this morning, so we're very grateful that you came here. Listen, Peter, I mean, there's no shortage of things to talk about when it comes to crypto and blockchain, but when we think about 2022, I want to start there because there was a series of implosions, I don't know how you would describe it, missteps, crypto plummeted, lots of mistrust in the industry as a whole. How would you characterize 2023 for the industry about 5 months in, I guess we should say?
Yeah, so I think 2023 has been largely pretty positive for the industry. So if you look at sort of year-to-date returns, the digital asset class would be the strongest performing asset class in financial markets. It's up about 45% on the year so far. But it's probably worth talking about 2022 briefly. You know, in crypto, we have an incredibly cyclical market. So there's about a 4-year cycle in crypto. Part of the reason it's so cyclical is it's still a very small market. So if you total up all the major cryptocurrencies in existence today, they're worth about 0.6 of Apple. So it's still a very small market, and you're going to have a lot of volatility and cyclicality within that market. What was a little unusual about 2022, which sort of our models suggested would be a correction year, and it certainly was a huge correction year, is that we had a lot of counterparty failures. We had a lot of sort of failure of companies inside of the crypto space, and one of the most notable is certainly FTX. I think that is a little bit crypto's version of the great financial crisis, but it turns out when you don't have the Fed to backstop, it's going to be a lot more violent, right? There's no overnight window in crypto. You can't go put your illiquid assets somewhere and borrow liquid against it. You are totally on your own. And that means that really only the absolutely strongest players survive. So if you look at like the 12 most valuable companies in crypto a year and a half ago, there's only 4 of us left. And so only the absolute strongest survive. But I think for trying to build a system that is native to the internet, that is sort of beyond any one country, that is beyond any one central bank, it's actually really healthy for those firms that are not prepared to be resilient in that fashion to fail. There's a little bit of self-interest there because I have 8 less competitors now. But I think it's still really healthy to have these sort of like cleansing periods through the market. That said, it was a very wild year.
Yeah, wild, tumultuous, and as I was mentioning, there's a lot of trust that was lost given that. So then, how do you?
I think there was trust that was lost, but there was also trust that was gained. So, for example, we had one of our biggest issues in our institutional business, or one of the largest prime brokers in the world, is that our onboarding process was a lot more difficult because we operate out of entirely regulated entities with like very real regulators like Moss or New York. And so it's very intense. And so our onboarding is a lot harder than sort of offshore unregulated players, right? We would lose clients to those folks. Over the last 6-7 months, we've seen a huge surge in onboarding because people want to be trading opposite a regulated, trusted institution that was able to survive the last 12 months. So a lot of trust was lost. A lot of trust was also gained. So for us over the last year, we've seen a net client inflow on both a number of clients basis as well as an AUM basis. And so it's, it's a bit nuanced.
Where are you seeing the most growth in terms of clients?
Right now, the most growth that we're seeing on the consumer side is in sort of rest of world markets. So I was sharing backstage, we're growing very quickly in Nigeria, Ghana, Colombia, Argentina. We also grew a lot in Ukraine because we made our service entirely free in Ukraine. And so we've seen a lot of growth in these markets, which is predominantly driven by stablecoin usage. It's much more driven by stablecoin usage than it is driven by, sort of purchasing, selling, investing in cryptocurrencies. And then on the institutional side, most of the growth we're seeing is largely driven by consolidation. So, a lot of competitors having gone under, there's less places to trade, there's less places to onboard, And so we're seeing a lot of growth that's driven more by consolidation than anything else.
On the institutional side, though, you mentioned that you and your team had to shut down your the wing of your institutional business. Can you?
Oh, no. No. I'm not sure. We are very active in the institutional market today.
Oh.
We probably have traded with at least 3 or 4 clients since you and I sat down. So the institutional business is incredibly active today and has picked up a lot of market share over the last 6 to 12 months.
What about going forward? Because when we're looking at the macro environment at this point in time, there's a lot of talk about a potential recession in the U.S. I mean, what do you think that then is doing for the industry as a whole? Does that benefit crypto and blockchain?
Crypto is a risk asset.
Yeah.
And so if you look at crypto on a sort of multi-year basis, it's not very correlated to equities. Mm-hmm. If you look at crypto on a week-by-week basis, it is pretty correlated to equities. So it kind of depends on, are you investing for 1 week or are you investing for 2 years? But I think on a short horizon, a U.S. default or a U.S. recession are probably bad for crypto.
Why?
Because they're a risk asset, and people want to take risk off. I think on a long horizon, they're probably good for crypto. So one of the strongest price moves that we've seen this year was when U.S. banks started failing. And I think if the U.S. government defaults, we'll probably see a quick pullback and then a very strong push upward in the crypto market.
What are you anticipating then? I mean, how closely are you paying attention to it?
I think there's probably at least 30 to 100 people in this room alone that are better at predicting whether the U.S. will default than I am. So I don't really know, but I think there's probably never been as high a chance that they won't figure out how to raise the debt ceiling. But that's really just based on my sort of view of U.S. politics, which is that it's incredibly entrenched now and very hard to get anything done. And certainly that's been the case when they've tried to pass any kind of crypto regulations.
And I'm glad you brought up regulations, because that's really been a lot of the talk too in 2023 in the US and also more broadly. When you're operating and when you're thinking about expanding, how are you navigating the different regulatory environments and the conversations that regulators are having at this point in time? I saw somebody describe the US's environment right now as hostile. I mean, I wonder, Europe, UAE, what are you seeing?
Well, so we've been engaged with regulators for 8 years now, and we've seen it sort of ebb and flow. We've seen the U.S. in that time period be very pro-crypto. We've seen, all sorts of things over the last 8 years. And what I will say is there's always a lot more noise than signal in all of this. The long-term trend has been pretty good for crypto. So
in the U.S.?
Globally.
Okay.
So we've gotten closer and closer to regulatory certainty. Crypto in the U.S. has now become a bit of a political issue because there's a few folks in the Democratic Party who have certain views about it. And then I think even within the U.S., you have the SEC, which is probably what they're referring to as being hostile. Then you have state regulators that are very collaborative. You have the CFTC that's very collaborative. Treasury is actually a very collaborative regulator. So the U.S. is very nuanced and complicated regulatory environment for financial services companies, because unlike, for example, Singapore, where there is one regulator, MAS, they regulate everything. In the U.S., you have literally 57 regulators. There's 57 regulators in the U.S. to regulate financial markets. And so it's really impossible to characterize whether they're hostile or friendly or productive, because you almost have to rate every single one of them.
So then how have your operations been then in Singapore?
Yeah, Singapore has been really good for us. We run our regulated institutional business out of Singapore, which is regulated by MAS. The Asian market is really key in crypto. It's not a big market for us on the consumer side, but it's a big market for us on the institutional side. And there's a lot of really fantastic talent in Singapore, both in terms of crypto experience as well as in terms of TradFi experience. And so it's become, one of our 3 largest offices and a really key part of our global operation.
What about here in the UAE?
We do not have people in Doha. We do have people in Dubai, but it is comparatively a much smaller presence.
Do you see that growing, though?
I think it depends on how the regulations shape.
Okay.
So right now, the government is in a very healthy, consultative process with the industry about regulations. What should they look like? What do they want people to do out of Dubai? So on and so forth. I think so long as those end up where we think they will, we'll probably be investing heavily in Dubai and the greater
Which is
UAE.
where? Where do you think they'll be?
So at blockchain.com now, I'm not the licensing and regulatory expert.
Yeah.
I just get the broad level summaries. But I think essentially what we usually care about is, are these rules going to keep the customers safe while still allowing the customer to do what they want to do? Because when you restrict the customer too much, what they do is they go use an offshore platform, right? So now we're disadvantaged because we're complying with the regulation, and the customer is sort of like on the equivalent of FTX, which was an offshore platform, instead of being on a regulated onshore one. And so nobody's being served well by those regulations. So there's a real sweet spot between regulating enough and regulating too much. And we're looking to always be in that sweet spot.
Well, and how do you see mainstream adoption, considering all of the different regulatory environments globally? I mean, some people say that there needs to be one international standard. Do you believe that? I mean, how do you get more people bought into it, especially considering you're saying we were in a corrective year last year. How do you get more people on board?
It's a tough question because most financial markets are really nationally driven. Like there's a US financial market, there's a British financial market. Crypto was built for the internet, which is transnational. And so it is really hard to regulate it without a global standard. I think we are seeing that developed though. So right now, one of the most exciting developments in crypto regulatory is that you have the MiCA standards in Europe. And so you'll have one set of standards for all of Europe, which might not sound exciting, but it's super exciting. Which is kind of funny that I'm now super excited about regulatory regimes. But the UK is also going to basically be MiCA standard. So you'll have yet another zone. So for example, if the US was to emulate their European counterparts and come up with something similar to MiCA, you'd basically now have almost a global regulatory regime. So you're getting closer and closer and closer to that, which I think is really healthy. But it's probably unlikely that they create like the United Nations for crypto regulatory.
you don't see that happening.
I think that's unlikely. So what we're focused on is how do we make sure that the different major regulatory regimes are cross-compatible.
And how do you anticipate? I mean, you said it's a 4-year cycle, right? How do you prepare for what could potentially be the next down cycle or up cycle? I mean, you said that you think Bitcoin is going to go to 100.
So I got out of the habit of making price predictions about crypto on stages like 7 years ago.
Oh, man.
So I no idea.
Okay.
But I generally think that the crypto market is going to be much bigger in the future than it is today.
What's the future though? And what will be the catalyst for actually seeing it go up?
So crypto operates in this cycle where you have sort of an exponential high year. That was 2021.
Yeah.
What a year. Then you have a major correction year, which you just witnessed in 2022, which was quite painful. Now we're sort of in a recovery and continuation year. Then we'll have another exponential year. So I never know exactly where we are in the cycle on a week-by-week basis, but I generally know where we're at sort of on a quarterly basis. So I generally expect the market to be positive for the next 12 to 18 months. What I will say is, as a crypto company, it's actually quite challenging. There's not a lot of crypto companies that make it to their 5th birthday. There's very few that have made it to their 10th birthday. There's actually only 3 that made it to their 10th birthday, and there were hundreds, that started 10 years ago. So the death rate's like 99 out of 100.
Does that spook you?
Still here. I think that the key is thinking a lot about your cost basis, because you are going to have these amazing years, and you're going to have lean years. And so you almost need to take inspiration from like a commodities business, like an oil company or something that's dealing with a lot of revenue volatility. And then I think the second thing is, what I tell people who are going to be involved in crypto is that you need to figure out a way to manage your own emotions around it, in the sense that in the big up year, it's not as good as you think it is. Everyone always gets too excited. They think it's going to continue like this forever. They take up their cost basis on their life, so on and so forth.
Yeah.
The good times are not as good as you think. But on the flip side, the bad times are also not as bad as you think. And the key is to somehow, treat it as like a 365-day moving average. Take out some of that volatility to the bottom, some of the volatility to the top, and just keep steadily building over a very long period.
That's easier said than done, I think, for a lot of people.
Yeah.
So then what would concern you then? Because it seems like, as you were just mentioning, you seem pretty steady despite all of the volatility that we have seen. What would then cause you to maybe be concerned about the trajectory that the industry is headed in?
Well, I have a unique advantage. This fall will be the 10-year anniversary of me being a crypto CEO full-time, which means I have no nerve endings left in my body.
Oh.
They've all been blown out. But to answer your question seriously, and something I was sharing backstage is, I would be really worried if there were less developers contributing to open source crypto projects today than there were 3 years ago. Every cycle, we've seen a slight decline in the number of developers contributing. It's something that we track. This is the first cycle where there's actually a growth in the developer community, even in 2022, which is really shocking to me. And the reason this matters so much is, going back to what I said at the beginning of this, crypto is very small today. So if we want it to be really big in the future, a lot needs to be built between now and then. And if there's no one working on that, our expected value in the future isn't going to be that high. And so for me, one of the most encouraging things in the crypto market today is that real growth in the developer community. And something that would really worry me is if I ran those numbers in 6 months and we were down 50%. I'd be extremely concerned. But not yet.
What gets in the way of that?
I think that when countries like the US have some regulators that are very openly negative about crypto, it's going to discourage people from building in crypto. So if enough regulators around the world spoke that way about cryptocurrency and the technology, I think that would probably dampen developer enthusiasm in a way that would be negative for the space.
But that could potentially open up opportunities, right, for other countries and other environments.
And it has opened up opportunities for other countries. So, France, Portugal, UAE, Singapore, Hong Kong, London increasingly, interestingly, have all been very, very excited to take up the slack that the US has sort of created. Very pro-crypto, very, very constructive with the folks that they want to regulate. And they've taken, a huge amount of talent. Like, there's been thousands of incredibly talented people that have left the US and moved to these other jurisdictions over the last year.
So for you and your company, are you really leaning into then your offshore operations, offshore from the US, considering that?
So we don't have any offshore operations. We only have onshore regulated operations, but we have them in multiple countries around the world. So no, we're investing heavily in Singapore. We're investing heavily in Europe, because those are the two most certain environments that we have. And that is coming at the expense of investing in America.
How much are you investing, and how much do you see that increasing by the end of the year?
The vast majority of our resources and CapEx investments are now outside the US.
Wow. And your prediction for the end of the year?
I would expect that to remain true.
Yeah?
Yeah.
All right. Peter Smith, thank you so much for your time.
Thank you so
Thanks,
much.
everybody.